Your money is losing value every single day you keep it in a savings account.
And most people don't even realize it until it's too late.
Today, we'll show you how inflation is eating away at your savings.
And more importantly, how investing can protect you and even grow your wealth.
Here's something we're all aware of. $1 today won't buy the same tomorrow.
That's inflation, the rise in prices of everyday goods and services. It means your money loses purchasing power over time.
Even if your savings account balance looks the same, what it can buy is shrinking.
Here's an example. Imagine you saved $10,000 in 2013. Back then, the average rent in the US was about $1,000 a month.
Fast forward 10 years and the average rent is closer to $1,700. That same $10,000 savings doesn't even cover 6 months anymore.
A lot of people think, at least I'm being safe, my money's in the bank.
But that isn't true. If your savings earns 1% interest, but inflation is 3%, you're actually losing 2% of your wealth every year.
Over 10 years, that's a massive difference. You might feel secure, but inflation is quietly eating your future.
And that's why we tend to think investing is more about defending your money from inflation than just about chasing big profits.
Historically, the stock market has averaged 7 to 10% returns per year.
Meanwhile, inflation has averaged around 3%, which means long-term investors usually come out ahead.
Instead of watching your savings shrink, you're giving your money the power to grow faster than inflation.
That's why wealthy people invest, not because they love risk, but because they know not investing is riskier. So what can you invest in to protect yourself?
First, stocks. Companies raise prices with inflation, so owning stocks means you benefit from that growth. A low-cost index fund is one of the simplest ways to get started.
Second, real estate investment trusts, or REITs. Rents usually rise with inflation, which means REIT investors often see higher payouts when prices climb.
And third, Treasury Inflation Protected Securities, or TIPS. These are government bonds designed to adjust with inflation. While TIPS are issued by the US Treasury, many other countries offer their own versions of inflation-indexed bonds.
The point is to put your money where it won't lose to inflation instead of chasing complicated strategies.
If you're scared of investing, we get it. We used to feel the same way.
But once we realized that keeping money in savings was a guaranteed loss, investing actually felt safer.
We're protecting our future one step at a time.
And the earlier you start, the easier the fight against inflation becomes.
Let's say you have $5,000.
If you leave it in savings earning 1%, while inflation is 3%, in 20 years your money's worth about $3,300 in today's dollars.
But if you invested that $5,000 in a total stock market index fund and earned 7% a year, it could grow to around $19,000.
That's the difference between your savings shrinking and your money multiplying. Inflation isn't something you can avoid, it's part of life.
But you can choose whether it eats away at your savings or whether you fight back by investing.
And remember, investing doesn't have to be complicated. A simple index fund, an REIT, or TIPS can all help protect your money.
The key is to start, because the longer you wait, the more inflation wins.
So if you found this helpful, hit like and subscribe, and let's fight inflation together.
Hey, we're the money-wise couple.
We're not financial advisors, just a regular couple who
Paid off our debt, invested our money, became financially independent.
and we're here to help you do the same.